Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, almost 50 points on the Nifty. The Sensex up about 1/3%. Ashwani is with us. Ashwani, good morning. Simply more to go from here on the index itself, or you think again it'll falter around here?
See, what's happening is that the bears are trying to defend 11,050, but they have not been successful and they are losing ground because the market has sustained 11,050 A. B, today large stocks are moving up. HDFC Bank is up almost 2%. HDFC is higher. Kotak, IndusInd, Bajaj Finance, Bajaj Finserv. So my sense is that this market is ready to surprise on the upside, because if 11,050 had to hold on, we would be 70 points lower than that. This sort of moving sideways just means that the supply at this zone is getting weaker, and sooner or later I think the market should go through this, and that's the sense we have right now. And possibly stops for this position could be closer to 11,020, particularly financials, because of bond yields and all kinds of crude cool off. They are looking definitely strong. So once financials start to show strength, it becomes difficult for the market to come off. Having said all of that, I think HDFC Bank is a buy with a stop of 21.95, target of 22.50. Titan is a buy with a stop of 8.45, target of 8.80. And Ultratech is a buy with a stop of 39.50, target of 4,070.
Within the financials, Ashwani, what would you choose, which are rallying today?
See, basically Bajaj Finance, Bajaj Finserv, HDFC Bank, HDFC, L&T Finance. So all kinds of NBFCs, banking. Some of the banking stocks rallied yesterday. They have come off a little bit, but the stronger banks are rallying today, the big private sector banks. So those are the kind of plays you need to take. Yesterday LIC Housing did well. Today Indiabulls Housing is doing well. So overall, some sort of softness of rates often tends to make the financials do well.
The PSU bank space saw large moves yesterday, but one reckons that the market is wizened up, Ashwani. I mean, not even 2 days worth of rally here. I mean, actually, if you sold yesterday at close, you're making money now. Stocks are all lower.
See, they are lower, but they haven't lost all their gains. And given the kind of smashed up situation they are in, my sense would be that, once this decline is over, you will see probably higher levels. The entire financial space looks ready for a trading rally, and that should play out in case the market is able to hold on to 11,050 thereabouts.
Okay. All right, Ashwani, we'll let you go on that note. Thanks very much for joining in and talking to us. So that's the view coming in on the technicals of the market. For the mid-cap index, just about lower by around 120 odd points, underperforming what we are seeing on the Nifty and the Sensex. Welcome back. Well, let's get talking about some news on M&M. They're going to consider fundraising via NCDs on the 27th of July. So that's next week. Watch out for that. But let's get talking about the fundamentals of the market. We have Ashish Somaya, CEO of Motilal Oswal EMC, who joins in to discuss that. Ashish, hi. Thanks very much for joining in. Well, let's start with the kind of interest we're seeing in the NBFC space. Bajaj Finance, 52-week high, HDFC above 2,000 rupees, Indiabulls Housing, which is up 4% today. How are you approaching this space? Would you recommend maybe building positions incrementally here?
I think we've been owning most of the stocks that you mentioned. We've been owning now for many years. But I must admit that things look a bit stretched, for sure. I think it's also, got to do with how many, where are people actually seeing the traction, or where are people seeing the potential in terms of earnings, because, the market has been pretty polarized. And there is huge sections of the financials which is led by PSU banks, which have obviously not been encouraging at all. And on the other hand, some of these NBFCs and private banks have been, believed that they would benefit out of it. But to be, on your question straightforward, I think they really look stretched.
But will that, will valuations by themselves, Ashish, morning, cause meaningful drawdowns in these kind of names, the HDFCs or the Bajaj Finances?
So frankly, difficult to forecast how long this kind of excitement for these counters or these kind of companies would continue. That's difficult to forecast. But on Ekta's specific question, within the framework of what I can state, I would say that they clearly look stretched. And while when there is momentum, difficult to forecast how long they can go. But yeah, I mean, they look very expensive.
Just as an aside, Ekta, somebody was telling me that, and Ashish may have the numbers since he's got all the numbers in his head, that the alternate, I mean, ex-mutual fund, institutional money, which is PMS and AIF and all of that, I mean, that part of the market now owns almost 80,000 crores worth of HDFC Bank. I mean, so, the obsession with HDFC Bank is not just with mutual funds, but with other parts of the business as well, which are now growing much faster, Ashish. I mean, I don't know if you want to offer a comment.
Yeah. No, I mean, if you see PMS and alternate investment funds, I mean, even if I stick to long only equity Cat 3 kind of funds, they've clearly grown a lot. I mean, if you just take perspective on numbers, I think in 2013, the equity mutual fund business was more like 1,75,000 crores, which is now just short of 10 lakh crores. At that time, I remember PMS used to be less than 10,000 crores, and now it's 1,25,000 crores. AIFs practically were close to zero. My sense is the Cat 3 is more like 60,000-70,000 crores now. And yeah, I can imagine, and they don't have restrictions on sectors and stocks. So there could be some which could be even owning a large proportion of their portfolio in 1, 2, 3 or 5 or 10 stocks. So concentration seems to be a bit higher out there as well. But I think a lot of the names that you're discussing, one of it is the TINA factor. There's not many alternatives in terms of where you're witnessing the traction. Plus, I think there is this huge conviction that, while PSU banks can go through a cycle, but how many can come back and capture market share and, get back to winning ways, I think that is also something to be thought about.
Okay. Ashish, pharmaceutical stocks, even Frontline have come off in terms of momentum in the past couple of days after that great pullback that we saw. Are you selling into this rally? Are you buying into this rally? Are you not touching them?
I think we've kind of been through the whole ride. Maybe we overstayed at a point in time when we made money, we overstayed. And then I think we've done the whole ride downwards and then a bit on the upwards in the recent past. So we are staying put. I mean, if you see our portfolios, I mean, it's public information, we are staying put. Only thing to say is that a lot of our exposure has mainly been in the domestic mid-cap kind of companies, but that again has been for the last 4 or 5 years. So no changes in our positions really.
Right. Ashish, I was, some of your tweets, etc., have focused on that 10 lakh crore number and, 7.5 odd lakh crores into the top, 200, 250 companies because of new rules. So just for our viewers, just put those numbers out again. And second, is that leading to large sections of the market, especially mid caps, small caps, etc., which have become cheap for these reasons, but which may possibly remain cheap because, I mean, large money will not go into them because rules don't permit it. What your sense?
The rules, yeah. So I think one is what the rules permit and one is what actually happened in the last few months. So if you take as of June end, the numbers is more like 9,93,000 crores in equity mutual funds. You remove about 80-90,000 crore which is in ETF, you leave it out. So you're left with 9 lakh. 1,70,000 crore is balanced funds. So you assume that half of it is debt. So you're left with say about 8 lakh crores totally, which is in equities. And my understanding or whatever homework that we have done tells us that as we speak about, and of course it was a change which has been executed over the months. But as we speak, more like 7.7 lakh crores is invested in the top 250 stocks. Now look at it this way that, a large cap fund is defined as 80% of the portfolio stock number 1 to 100. And in the past, this used to be relatively relaxed and you could find large cap funds owning 9-10,000 crore also. But today 10,000 crore and less is actually small cap. So the whole small cap mutual fund industry is barely 20-25,000 crores. There are 4 or 5 funds, couple of them are big. Last 1.5 years, they are not taking any inflows at all. Right? And when this whole regulatory change has happened, at that time already the headwinded behavior of small cap had started. So when you are told under a particular, regulatory requirement that you have to rebalance your portfolios, and mid cap should be 65% between 101 to 250, large cap should be 100% between, 80% between 1 to 100. When you have all these requirements, I think the industry was over-invested in the 10,000 and below segment. The industry was over-invested there. So they had to move out of all of that, whatever was the over-investment, and then they had to put that money into, the other segments. Now, if you're a mid-cap fund who is overexposed to small caps and you got to sell that down, in that moment what you will do is that, already the market looks bad, so you might actually start buying large caps instead of sticking to whatever small caps you had. So I think big rotation. Now, if you look at what the regulation allows, clearly compared to the past, you will see less exposure of mutual funds into small cap. Mid caps, 65% 1 to 250 means that they have to be more like 75-80% to allow for passive breaches. And so overall, if you ask me, the scope for mutual funds to put money in small cap has reduced. Secondly, any which way, the number of small cap funds or PMSs were very low, and most of them haven't been taking money. And you're right, along with this ASM being put in and, margin calls and stuff, everyday new announcements. So I do get a sense that purely on fundamentals, some of these small and mid caps are looking attractive now, and there could be rotation happening anytime soon.
But the question is, where will that money come from, right? And Ashish, we'll put you to the task of answering that. But let's just take a very quick break, Ashish. We are being told that we have to, so let's just do that very briefly. Ashish stays on, back in just a jiffy. So we've been in conversation with Ashish Somaya. Before we took that break, he just basically put out the big numbers for us. 8 lakh crores in equity in equity schemes, about 7.7 lakh crores in the top 250 stocks in the market. So there's only 25,000 crores in small caps, which is essentially anything under 10,000 crores, as SEBI defines it. The rules define it now. And Ashish was saying, as a result of these rules, there's a fair bit of underperformance, undervaluation. At some point, he was saying, before we took that break, that this may reverse and they may rebound. So naturally, Ashish, the question is, where are the flows going to come for this rebound to happen?
See, I think let's look at it this way, that when you look at large caps, for example, we are obviously we can obviously see that a good part of the industry would be in top 250 stocks, so there's no going away from that. But yes, within the industry also there are multi-cap funds, and there are of course mid-cap funds which are allowed to have some exposure into small cap. Now, just before the break, I was telling you that while there has been rotation in the portfolios, at the same time the environment for small and mid cap became very headwinded. So the rotation has resulted in people, and anyway there was a belief that large caps are relatively cheap. If you see the stocks like TCS or HDFC, a lot of them were significantly under-owned. For example, Reliance, significantly under-owned in mutual fund portfolios. So confluence of multiple factors, I think what was possible also has maybe got rotated out. Now you can see that some multi-cap funds and mid-cap funds are allowed to buy small caps, and ultimately on a relative valuation basis, they might find it attractive to come back, because there's nothing in the earnings or nothing in the numbers which says that fundamentals are destroyed. On the other hand, if you see oil prices, which is always seen to be a big spoiler for mid-cap companies in terms of input costs, that also has started to reverse. It's not as big a fear as it was maybe 15 days back. And plus, like we already said, portfolio management companies, alternate funds, for them the scope to actually run small cap and mid cap strategies only increases. So I think purely because there is value, you would see a rotation back.
Okay, Ashish, before we let you go, I wanted your thoughts on something like an Ashok Leyland. It's a CV maker, great way to play the pickup in the economy, but reacting negatively to its numbers, one. Plus, we have these new Axel norms to deal with as well. Yeah. What would your approach be on a stock such as this? Good time to pick it up since it's down 8.5?
So just one disclaimer, I myself don't deal in stocks at all, but one of our funds definitely owns this particular stock. It's public information, it is there in the portfolios, and we owned it well before the result came. We still continue to own it. I think the result was very good. It was in line with expectation, and by some people's measurement it was actually better than expectation. And then, like you rightly said, this extra loading has kind of put a spanner in the works. There's not enough clarity on what that extra loading means, and how it will be measured and what are the penalties, etc. Not much clear on the implementation. But we continue to hold and we continue to remain bullish actually. So we've not made any changes in our portfolios.
Fair enough. Ashish, I mean, you don't look at stocks directly, but you do look at the business as the CEO. Good time then to launch a small cap fund from the Motilal stable?
So we do have small cap investments, but they happen more in our alternate investment funds and in our portfolio management services. Clearly, last 6 months from our clients' perspective has not been a pleasant time. So I would say that people should not only hold on, but they should at these times is when they should show a bit of gumption and look at investing more. But as far as a mutual fund is concerned, I don't see us launching a small cap mutual fund for 2 reasons. I have seen many cycles where the money comes after the performance has come. And second is in a framework of a mutual fund there are scalability challenges. So I don't want to take chances of launching a retail product where money will come after the performance comes and then people have a bad experience. I wouldn't do it in an open-ended format really. But we continue to have huge small cap holdings through our alternate funds as well as our PMSs.
Okay.
And I think that is doing pretty well.
Okay.
All right, Ashish, we're going to leave it on that note. Great conversation. Thanks very much for joining in and talking to us. So that's the view coming in from Motilal Oswal. Need to take a break now, but more on the markets once we're back. Stay tuned. Welcome back. Well, talking about specific stocks, one stock which should come up for you is Bandhan Bank. That stock is up around 4% ahead of its numbers, and its numbers are probably going to come out soon enough. Its press conference is scheduled at around 12:30 p.m. today. Street is probably expecting the loan growth to remain steady for the company this time round. Net interest margins maybe could be under pressure. Remember, loan book was actually up around 76.5% year-on-year in Q4 and 29 to 30% on a sequential basis. So I think the street will be watching out for that momentum to continue. And in terms of the gross NPAs, it was at around 1.25% last quarter. So let's see what they sustain at this quarter at this point. So Bandhan Bank holding up well, but other stocks such as Idea is at the low point of the day, down around 4.5 to 5% for that one. But as we wrap up the show, we're going to leave you with some opinion on the market and sectors from Mahesh Patil of Aditya Birla Sun Life AMC.
Stock like HUL will be a classic, one of those 5 stocks, okay, in the Nifty, okay, which has done very well. And the valuations there had gone, well above the long-term average. It could be 2 standard deviations above the long-term average. So it's more about a question about, the rally what we've seen in the stock before the results. I think it's giving away some of those gains rather than, reading too much into it. I think overall in the consumer pack, the earnings growth should be fairly good going forward because consumption is looking strong. Rural, even Lever also indicated that the rural demand has been fairly good. And yeah, I think the stocks might, some of the consumer stocks have done well. Lever was one of them, but others have also done well.